Let's turn to oil, the other big story of the day, jumping after that surprise OPEC Plus production cut. That news sending energy stocks sharply higher. The sector closing up around 5% today, having its best day since October of 2022. Joining us now on the Newsline is 314 Research co-founder and strategist Warren Pies. Warren, great to speak with you here. I want to get your thoughts, A, as somebody who's covered energy for a long time. A, were you surprised to see this move by members of OPEC over the weekend? And B, where do we go from here?
Yeah, thanks for having me. I think everybody was surprised by the move, to be honest. I wish I could sit here and say I was clairvoyant and knew that this was coming from OPEC, but it was a true surprise move from the cartel. Now, I think that if you go back, you can kind of see the clues and understand potentially the reasoning behind the cut. So a thing we've been highlighting for our clients and is the positioning within the futures market. So we saw managed money futures positions, so that's hedge funds and CTAs, just the fast money in the crude oil market, get extraordinarily short just leading up to last week. It actually triggered a buy signal in our main crude oil model at 314. So you have short sellers off sides, and then the other side, you have the banking crisis, and that was really the impetus for them getting short. And the Biden administration that's been selling SPR barrels out for the last year, more or less. And so they've had their opportunity to buy these barrels back, as they said they would, and then they kind of balk at the deal. And I think that OPEC was sending a signal to the market here, to the Western SPR dumpers, and to the speculators that they're still alive and they're still a wild card in the market. And so I think that from our view, in our model's view, and our everything we look at, this is absolutely a buying opportunity for oil and anything with oil beta here. I think this is going to be a catalyst for higher prices going forward.
Okay, I want to get into the specifics of that. But first, it sounds like, I mean, is it fair to say, and I've heard some folks come on our air today and use this term, is it fair to say that there's an OPEC put out there in the market now?
Yeah, absolutely. I think that they've more or less revealed their hand. They probably want prices up closer to $90 a barrel. I think that's what they're targeting, and they're not going to be. I don't think they're going to lose sleep if we get back to triple digits, And so, yes, I think that the OPEC put is back. When you spin this forward to the second half of the year, I mean, the China reopening is kind of a slow burn on the demand side. And we've already seen, I think there was a lot of misreading the oil situation earlier this year. We had inventories building in the U.S., and really this is a function of how profitable it was to be a refiner in the U.S. last year. So refineries in the U.S. ran full out last year, and so they had to undergo a maintenance period. That was early this year. Otherwise, you can't run a facility like that flat out indefinitely. So we saw refinery utilization drop like we were in a recession in the first quarter of this year. And that caused crude oil inventory to build. But we're not in a recession. The economy is actually strong, and you have the tailwind of the China reopening. So I think that the folks and the speculators that got short based on these inventories and this idea of a macro play, they're really getting burned, and that's going to continue.
Now, I know you've been very cautious. I'd even call you bearish